Hello bro and welcome back to the new stock evaluation video. So today we are going to analyze this very famous company called Visa Incorporated with a stock ticker V. So bro, we have nothing to do except to analyze it, of course. So we will analyze the stock by the help of this little Canva presentation that is very beginner friendly. So bro, let's go straight into it, okay? So as a beginner, you want to think about the following 6 things, okay? You want to care about the chart, you want to care about the profit, debt, money on the bank account, value, and price, okay? So bro, let's start with the chart. As you can see here, you have a little instruction on the bottom, okay? Chart has to grow for the all 10 years that we analyze. Now, what does that mean? Preferably, we want to see the chart growing exponentially through the all years, kinda like this, what I'm drawing like now on the screen, okay? We want to see that growth. And you can see that the chart right now here exactly follows that line, okay? You can see that here it was a massive growth and then a little fall and now growth again and slight fall right now here. But generally, the chart follows this exponential growth, okay? We want to see kind of going up and down like this, but generally just grow, grow, grow. So that's an amazing sign. Chart is absolutely crazy good. So we have a good start, okay? Now we come to the profit, and profit also, as you can see right now here in the instruction, has to be in plus and it has to grow. What do we see right now here on the chart? Okay, the profit grows, it follows the very same exponential growth, just like the chart right now here. So bro, that's an amazing sign to see. So I have absolutely no comments right now here. It grows, the profit is in plus. That's what we want to see. It's exponential growth. Very perfect. Very, very perfect. Now we come to the debt, okay? And the instruction tells us that debt has to be low. And preferably, bro, I can also tell you additionally, preferably we want to see debt decreasing through the years, okay? But right now here we can see two things. Thing number one is that they didn't tell us what was the debt in 2014 and 2015. And the second thing is, bro, that the debt is also increasing actually through the years from 2016 to 23. So that's a very bad sign. That's a very unfortunate sign to see, bro. So we don't like debt at all, okay? Because it's growing and not decreasing. Now we come to the money, and with money, I mean how much money do they have on their bank account. And generally, bro, if you want to have a good company, you have to have more money than costs. Now let's take a look at the money on their bank account right now here. So they have $19 billion in plus. That's absolutely amazing sign, bro, because what does that mean? That means that the money that they get is higher than the costs that they have. So here is a little plus actually. So this is an amazing thing, bro. It's an amazing thing to see that they have so much fucking money. Let's say $20 billion. That's crazy, bro. That's crazy. So I like that a lot. And you should also be as happy as I am when I saw that, okay? A bit of a joke, bro, but don't worry about it. Okay, now we come to the value. And with value, we want to see that the stock is undervalued. Now, how do we decide whether the stock is undervalued or not? We have two things that we analyze. Thing number one is P/E ratio, and thing number two is called intrinsic value. I know that those are some complicated terms, bro, but as a complete beginner and a general rule of thumb, you should follow the following, okay? So P/E has to be lower than 15, and intrinsic value has to be higher than the price. Now, where can you see P/E? P/E you can see here on this website, for example, Ticker Terminal. You can see it right now here. It's around 30.76. So I wrote that here, and it is higher than 15. It's higher than 15. So we don't like to see that, okay? This rule is kind of broken already, okay? Now we come to the intrinsic value and price. So intrinsic value is actually the fair price, kinda. What does that mean? Based on some complicated calculations in the background, the Visa stock should have right now this price right now here, $177. But right now, bro, the price of Visa is 273. So that means that the price is actually higher than the fair value. The price is higher than the value that the stock should have. So that means that the stock is overpriced. So we don't want to see that. So we have to mark that, unfortunately, also as a bad sign, okay? So the value is bad. And now we come to price, and price is very simple to determine. Price has to be lower than 150 euros or dollars or yens or whatever you are analyzing in. Basically 150 euros is the maximum limit that we want to see on a stock, because otherwise it's a bit overpriced, okay? And right now you can see that as the time of analysis, the price is currently at around $273. So it is higher than 150. So we don't want to see that, okay? This is way too expensive stock. So I don't like that at all. And now we come to the final evaluation, as you can see right now here in the title. So let's quickly summarize the data and then decide whether we should also buy or sell the stock, okay? So chart, as you see, it's growing. It has an absolute amazing growth, profit also. Debt is unfortunately increasing, so that's not a good thing. Money is absolutely amazing, bro. They have like $20 billion on the bank account, so that's crazy. Value is also, the stock is overvalued. Why? Because as you can see, P/E is higher than 15 and fair price, or let's say intrinsic value, is lower than the price. So it's overpriced, okay? And the price is also higher than 150, so that's a no. So based on our summary, what should we do? We should technically sell it, but this company is absolutely amazing in terms of the financials. The graphs are amazing. The profit is amazing. Take a look at here. Graph is absolutely amazing. It grows exponentially. Profit grows exponentially. Okay, debt is unfortunately bad, but money is also amazing, bro. They have so much money. They have so much growth. They have it's literally just growth. It's also a very famous company. It has strong financials. So, bro, technically, according to our analysis, you should sell it. But, bro, at least put it on a watch list. So if the price of the stock goes a bit down, then just go and buy it. I think I will do the same strategy, bro. I will put it on my checklist, on my watch list, and then maybe buy it in the future for a bit lower price, okay? So, bro, now we come to the end, bro. Thank you for watching. I hope you learned something new. Click subscribe if you want to know more about stock market videos, about more also about self-improvement. I'm trying to combine both of them and kind of get rich by that. So, bro, join me on this journey towards the millions. Thank you for watching. Comment if you want to see some improvements. Do the hard work and see you on top of the world.